I'm just piling it on here, but this is more in bad news for BTC. This is the theme of this episode. Hello and welcome back to the Bitcoin Cash podcast. Following Bitcoin Cash on its rise to global reserve currency, this is episode number 26, ETH and BCH capitalizing on Floundering BTC. Today is Saturday, the 14th of August, 2021. Yeah, this is episode 26. I am your host, Jeremy. I have with me here today Jett, who has been promoted to producer on the show. So we're going to test that out this week with doing an episode just the two of us, and then we'll try and get the regular guest rotation rocking next episode as well too. But I'm looking forward to this because there's a lot of stuff we need to cover in the last 2 weeks of news anyway, and yeah, so we got stuff to chat about. Jett, how you doing, man?
I'm doing good. It's been a busy week, so this is exciting. And I mean, first time producing a podcast, so something new.
Well, you've been doing some development, right? You told me with you got a bit of React work rocking in the BCH community as well.
Yeah, I don't know how much I can talk about that, so I'm just gonna keep quiet. But it's nice to get some work in this space.
Under NDA, okay, all right. We'll wait and hear the grand results of that in a few months. I understand it's just the commercial life. All right, cool. So yeah, I mean, first slide that we had coming up was just this little podcast news segment. So totally scrappy setup here, but basically, I am thinking that I do want to have at the start of each episode a little bit of an announcement of what I've been doing, because obviously with the podcast I'm doing other things, like I've been updating the FAQ on the bitcoincashpodcast.com site, and this week now we've got Jett as the producer, so might make this a bit more of the regular little intro segment for each show to keep on top of like what's happening with the podcast, a bit of podcast news. And then of course, as every week, we've got the price first up. So this week it is a very good week for cryptocurrency. Bitcoin Cash up to $648.66. One BTC buys about 71.7 BCH. So BCH has risen against BTC a little bit, but BTC is also having a good week, back up to like the 47,000, 47 and a half thousand, the highest amount since that sort of bottom at 29,000. So we could conceivably be back into a bull market. Maybe my predictions of the meltdown and everything, I hope everyone's not trading based on my advice, because obviously so far horrifically wrong. I mean, I do want to cover myself by saying Bitcoin Cash, global reserve currency, so you always want to make sure you do have a bit of a stack of it, but definitely, we are either in a bit of the bull trap as the bubble, melts down, or we could just be heading back into this grand, super cycle, run up that Colin Talks Crypto or, Dan Held, or a lot of these people think we're going to see. So I don't know. Do you have any thoughts on that actually, Jett? Are we going to the moon or not?
I think we're gonna have. Now here's the thing: I suck at any attempt at trading. I've stayed away from it because of that.
Yeah.
But I think we're gonna have a very short hype moment, and then it'll die. Cause I don't think we're getting young innovators involved. I think right now we're getting more of old school people. I saw Jordan Peterson was recently doing a thing with Bitcoin, and I attempted to watch it, and it was just very not my thing. So I expect we're gonna get a little more of the older folks that are maybe interested in gold or silver, maybe more right leaning, just for the like with everything going on with the state of the state. And but I don't imagine it'll last long, because those aren't people that are bringing any real utility, and they're not like mass influencers like I think crypto actually would need, like genuine people.
Yeah, yeah, I agree. I mean, I think it's definitely like people want to really think that, oh, we're going to kick off this huge new cycle or whatever. But I think it's very telling that you and I independently, we live on opposite, sides of the world really, and also just kind of have our own, connections and stuff to the scene and to watching the price and all that. And neither of us really feels like the hype is there, because that's when you know that it's really going to be a huge run. It's when suddenly there's so much excitement and people start coming out of the woodwork, what's going on with cryptocurrency, and it starts breaking on massive news sites and all those kind of things. And it's not happening. The people excited about crypto are the people in the crypto scene, but it really takes off when it's everybody else that gets excited.
Yeah, we had more hype 4 months ago. Like, I was getting text messages from people that I was trying to convince to get into Bitcoin years ago, and they were like, "Oh, have you seen the price action?" But I'm not getting any of that recently, so that's my metric. Like, when I start getting texts from people I haven't spoken to in a couple of years.
Yeah, yeah, exactly. Exactly. So I haven't been seeing that. So I think, yeah, I mean, I still sort of feel like, yeah, maybe this is a bit of a bull trap. I did get a little bit of BCH. I had got some cash set aside so that when there's a big crash, I'll be scooping up cheap coins. So I did get a little bit more, a bit of dollar cost averaging, but definitely I'm still kind of waiting for a bit of a big meltdown. So yeah, everybody can, trade accordingly. This is not financial advice. Do your own research. Just my opinion, but that's still kind of where I'm at. So off the price, let's look at the transactions that we got here. So it's still been, pretty stable, pretty flat from BCH, about 80 to 90,000 transactions. So again, probably not seeing like huge growth in the scene. Like if this was starting to really take off and without there being a clear reason why, then that would be another thing that once the price starts really rocketing up, everyone gets really excited and starts sending around their coins. The sort of activity explodes on chain usually at the same time. So we haven't really seen that, and we're not really seeing that in BTC either. And on the next slide as well, we've got the cent in USD, and it's kind of the same story here, where there was just this huge, sudden, out of nowhere, like massive explosion in BTC, where it went from 10 billion in a day and then just rocketed up to basically the all-time high at a bit over 70 billion. And then it just crashed back down literally the next day, and now it's still back in the 10 to 20 range, while BCH has been chugging along. And I mean, when I saw this, I really felt like that BTC is just price speculation. That's the only thing it's got going for it. I saw somebody talking about how even though the block space has trailed off a bit for BTC, and they aren't even using, they're capped at 1 megabyte, but obviously it was at 1 megabyte, and then everybody's migrated onto other networks, so it's less than 1 megabyte. There's actually plenty of space on BTC, but the fees still haven't gone down super low. And the reason is because probably the people that are using the chain are the exchanges who want to pay, $5 for their transaction or whatever, just in case, because it's actually more annoying for them if their withdrawals are delayed or they're batching up huge orders, and then people are like, oh, where's my coins, or whatever. So they just can't really risk it. So they're just like, look, we'll just pay these fees. But if that's the only trade that is going on, is people sending coins to exchanges, for the most part, then the percentage of like person-to-person commerce versus the ratio of person to exchange so that they can buy or sell or speculate has become so low, then that's where you get this kind of pattern where the price spikes, on-chain activity rockets, and then the price stops being as volatile, and it just all plummets away and all vanishes, you know? Yeah, so that's pretty much where we're at as far as the on-chain metrics. So one one thing I wanted to look at, because I think it's pretty big for the crypto space, is this EIP 1559, which is this long anticipated, I guess, upgrade to Ethereum as part of their London hard fork. So it went live, pretty sure, on the 5th of August. And the reason this was so hype, in keeping with the theme of price speculation, was that it adds Ethereum block fee burning. So essentially, the idea is that Ethereum has Bitcoin's monetary policy. It goes up and it tails off, and then it finishes at 21 million. But Ethereum, they just add more and more Ethereum forever. So they would be just inflationary. But with this upgrade, what it does is now every one of the network blocks, whenever people are sending around paying transaction fees, I think it's half of the transaction fee gets burnt, and that's not like sent off to a random address, which is what people usually think of when they think of burning crypto. But the network protocol actually just removes it from existence and doesn't pay it back out to the miners. And so in a way, that's kind of like everybody who is paying fees to trade on the network is like creating value, or is redistributing wealth to the holders on the network. So because if you're paying a fee and your coins are getting burnt, that obviously limits the supply, and then the supply and demand, the value of everyone else's coins go up. So this was all planned as part of their move to proof of stake. This is not necessary for proof of stake, but it's kind of a package of changes that they're doing. And because every block in Ethereum, which is every 15 seconds, releases 2 Ether, it means that theoretically, if there was loads of transaction fees paid, then they could burn more than 2 Ether. So they're adding 2 Ether, but maybe burning 2.5 Ether. And therefore, the block is actually deflating. It's not that it's not inflating, but it's actively reducing the supply on the network. And if most of the blocks were doing that, then overall the network supply would be deflating. So obviously everybody in the Ethereum community was very hype about this, because they thought they were all going to be getting rich, that if there was burning all these fees, then it would be making their own Ethereum more valuable. So we saw a lot of excitement about that. And it's now been live for, a week and a half. And there's been 42,214 Ethereum burned as of today, for about 136, nearly 137 million dollars of USD in Ethereum burned. So, did you follow this, Jett? What did you think of this excitement?
I haven't paid any attention. Everything that I see about Ethereum is about like crypto punks and penguins, so I just just tuned out.
Yeah, I mean, I think that the problem that, well, not really the problem, but the view on this that I had was that the Ethereum community are sort of losing a bit of touch with what made them different. Like originally, Bitcoin sort of turned into this Bitcoin maximalist, like hold and get rich kind of, cult. And then Ethereum community got very excited because they were like, we're going to flip in BTC because we're different. We're the new cool kids where the fees are low and we've got DeFi, and we're not toxic maximalists like the BTC community. But they're kind of going down the same rabbit hole where now that their network has become congested, their fees have also gone up. And a lot of the excitement has been driven to speculating for millions of dollars on crypto punks, and also now fee burning and this block burning. Everybody was excited about that. Why? Basically, the main reason was because, as they say, ultrasound money. So they really are just turning into BTC 2.0, where BTC was like, we're sound money and we're digital gold, and now Ethereum is just sort of trying to compete in the same thing, and the community is turning into the same thing, where everybody just wants to support whatever that they can sit on their coins and do nothing, and they'll just somehow get rich. In this case, it was the block burning, but at the core, it's kind of shades of the same thing, I think.
Do you know how much ETH has been produced from these blocks? Like, I'm wondering what the ratio of burn to production actually is. Or I guess what's the real inflation rate right now?
Yeah, I don't have the exact stats on that. I'm sure they are available. I have this screenshot here of some of the most recent blocks. So because there's 2 ETH produced in every block, it's like there has to be more than 2 ETH burned for it to be deflating instead of inflating. And in most of these ones, I'm pretty sure it's mostly all like 0.1, 0.4, 0.7. So it was not like nothing, but it was still less than the 2. And there is the odd block that is doing more than 2, but I think it is actually still, for the most part, the blocks are inflationary. And so, and if they wanted to have constantly deflating blocks, that would mean the community would have to be paying massive amounts of transaction fees. That's the other thing too. Like, it's not that this money is coming from nowhere, even though if you're just sitting on your coins and never doing anything with them, then you might feel like it's coming from nowhere. But somebody is paying these miners fees, and somebody is having a bad time being like, oh, look, I'm paying so much money to transfer around my Ether. I'd rather just not use Ethereum. I'd rather use US dollars, or I'd rather switch to another DeFi supporting crypto or something where it's not going to be so expensive. So it is a little bit of a self-defeating kind of thing, where, yeah, they sort of feel like, well, we're going to get rich because the money is coming from the fees being burned. But who's paying those fees that are being burned? It's them. Their own community are the ones paying for it ultimately. So, yeah, I think, as far as I know, I think it's still like about maybe it's like between 2 and 4% is kind of the inflation on Ethereum, and that this was supposed to like sort of bring it down. So in Bitcoin, it's about 1.8% at the moment, I think, in Bitcoin Cash, and with Ethereum they were like at 3 to 4%, and then they were hoping that this would bring them down similar to the Bitcoin rate of about 2%, or and sort of trending lower over time. But I don't know that there's been a lot of ETH burned, but I don't know that they've necessarily burned as much as they need to get down to that kind of lower amount. So yeah, just
Yeah.
just very strange, really.
It also seems like the oddball block is only producing 2 ETH. Like the rest of these are all like a little more. So that's curious. How does so do all of the fees get burned, or does some of it still go into the reward?
No, some of it still goes into the reward. I would need to look at the exact formula, but I thought it was like 50-50. Like, that's the other thing as well about this that didn't really make a lot of sense to me, is that, I mean, I love crypto. I've been following it for a long time. And even still reading their like proposals and everything like that, I was finding it so hard to get my head around what the hell's actually going on here. It's like now they have two ETH produced, and then they have the base fee. Now you pay a fee which the network somehow decides, and then on top of that, you can also pay an extra fee if you want, which is to try and prioritize yours above the ones that are paying the non-base. Like, if somebody else is only paying the flat base fee and you pay the flat base fee plus extra, the tip, like tipping a waiter, then you're more likely to get into the block. But I guess everybody has to pay a lot of fees because everybody's paying the base fee and then competing on these tips, when previously it was like just a tip, there was no base fee, and everybody was competing with just the tip. So now everybody's paying a load of these fees, and then from that, I think maybe it's once you add up the base fee and the tip, then half of that is burned and half of it goes to the miners along with the 2 ETH default. But it might be that it might not be that. It might be that only the tip and not the base fee, only half of that is burned. I don't know, actually. I did read up on this several times, but I'm still not like, I think there's, there's strength in simplicity, basically, right? So like with Bitcoin and Bitcoin Cash, it's very clear. It's like there's a certain amount of Bitcoin that halves every 4 years. That's how much you get for mining a block. And then you get the transaction fees. The users pay the transaction fees, they add up and they go into the block. There's 21 million and it circulates in a circle, right? Straightforward. Everybody can follow that. Like the more confusing Ethereum makes their network policy and stuff, just the more it seems to me that they're going down this rabbit hole of like, they make something more complicated to fix an earlier problem, and then that creates new problems that they couldn't anticipate, and then they need it more complicated,
Yeah, I imagine it's going to accumulate a lot of tech debt too.
Yeah, so I don't know. But anyway, the upshot of all of this was that they were very excited that they'd burned a lot of fees. And then on the next slide, I have, this was like not 100% supposed to fix their fee problems, but somehow it was supposed to contribute to reducing their fee problems. And it's done, it's not done that. In fact, their fees are going higher. So they were already in a bit of a fee crisis with, $5 or $7 or $10 transaction fees. And since putting in this EIP 1559 and being excited about the burning, the fees are now rocketing up, and they're now closer to $20, and they're even now way outstripping Bitcoin, which they were, like, historically their fees, when they had bad fee periods about the same time as Bitcoin, but now Bitcoin has had less fees because nobody's using it, and Ethereum's got a lot of use, but it's also still got even worse fees with this EIP 1559. So I think they were kind of hoping for this to like sort of help. And now I'm sure there's going to be a lot of discussion of like, oh no, but once we have ETH 2.0, once we have proof of stake, once we have these other changes, that will fix our fees, or we're going to have sharding, or we're going to like so many of these ideas. And I do have, disclaimer, I do have a very small amount of Ethereum because I'm interested in where all this goes. It's the one coin besides BCH that I have, a small fraction of, but the price is going up, so that's great. If you're not actually using Ethereum to do anything, you are getting richer. But on the other hand, it just seems like a bit of a Rube Goldberg machine where like they're constantly praying for the next thing to fix their like fundamental issues when maybe it just is the fact that they have a state-based model instead of an account-based model, and that by adding all these DeFi programs, they're just encouraging people to make automated market makers that will just fill up the blocks constantly to earn, a couple of cents of automatic profit and that kind of thing, right?
Yeah, I could see that.
So yeah, they really haven't got very far with this these Ethereum. Anyway, that's enough shitting on Ethereum. You got some good news for Ethereum and some bad news for BTC, which is that Coinbase, who are now, of course, a publicly traded company after listing their coin stock, they released some stats as part of their public disclosures for being a public company as to their trading volumes, and also, the breakdown. So in this Q2 of 2021, Bitcoin was only 24% of Coinbase's volume. Ethereum was 26%. And then, of course, everything else was 50%, right? So we didn't really get any insight. I would be fascinated to see where BCH kind of came into that list, but they must be subsumed in that bottom 50%. But even just with these three numbers, this is pretty like juicy stuff, because if you look at the previous quarter, Bitcoin was 39%, Ethereum was 21%, and other was 40%. So Bitcoin lost 15% share in that one quarter, and the 2/3 of that loss went into other cryptos, and some of it went into Ethereum. And Ethereum is now doing more than Bitcoin BTC. So it kind of just comes to the general premise of this show and the narrative that I'm always talking about, which is that even if Bitcoin's price is still the highest and it's still like sort of the most regarded or whatever, they have no idea. They're going to get run over like a train just when they're suddenly not expecting it, because every metric that is not the price is just constantly slipping away from their favor. And as long as they have the price is the highest, they feel like, oh, we're still the king, we're still the most known. But the market is just changing its mind, and it can't, everyone's just lost confidence in it. So here, Ethereum is already being traded more than Bitcoin, and just the general pack, the field of cryptos is also just surging at a crazy rate in terms of what people are actually interested in terms of, Coinbase are reputable. They're not going to be inventing these stats, and this is also real people. It's not like wash trading on like one of those big exchanges where well, maybe there's some element to that, right? But 50%, that's crazy. Any thoughts on this?
I'm curious if TechCrunch made this, or if we can get some info direct from Coinbase.
I think this was directly from them. I think this was from their public, announcements after because they're a publicly traded company.
Well, so there's a doubt in okay, so I have a doubt. There's a typo in other crypto assets. And so that makes me wonder who released this.
Good question. I guess maybe we can pull up the link and check. But there's a whole article like breaking down all this. But I'm pretty sure this comes, directly from like that. This was the numbers anyway. Came from Coinbase. Even if TechCrunch maybe like did up this diagram that shows it like this, but like.
Yeah. I only ask because I wonder if we can get a breakdown of the other crypto assets. And I also think it's really interesting that like quarter two of 2020 was the lowest that the other crypto assets had ever been. And I'm curious like what coins maybe they added between those two quarters, and see if that might explain something. Because if they're Ethereum tokens, then I think that should just be included in Ethereum.
Yeah, that's true, actually. I mean, I definitely found it weird. Let me see. I'm having a quick look at the article here. It doesn't look like there's much info on what all those sudden there's some stuff here as well about their revenues and like where money is coming from in that regard. But there's nothing about which coins make up those secondary markets. And I did definitely find it very weird when I came back to crypto after being away from it, and I looked at the list of coins and I thought, I don't know what all these coins are. And then at some point I discovered that, wait a second, they're not all coins where there's a network and there's miners, like Bitcoin or Bitcoin Cash or Dogecoin or Ethereum, and there's a physical network and there's a community and stuff. Instead, it was all just like tokens on top of tokens, really. So, and now as well, I'm still not 100% clear on how it operates either too, but there's like Tether and stuff where it operates there's tokens on several different coins. So you can have Tether tokens on Ethereum and you can have it on, like, how is that audited? How is somebody keeping it? Well, in Tether's case, it isn't. But in the case of maybe some of the other ones, how does anybody, keep the whole point of a blockchain is that it keeps a perfect track of the supply. And I suppose in theory, you can keep a track of a certain amount of tokens on Ethereum and some on Binance chain and some on some other chain. And as long as those chains are each independently auditable, then you can aggregate up the audit and say, this is how many there is. But it's the same as the Ethereum stuff. It's just getting more and more complicated, like more and more layers of indirection on top of what is quite actually a strong and simple base for a cryptocurrency.
Yeah, I'm kind of talking out my ass here, but I also wouldn't trust the Binance chain to be auditable. So I don't know if any of that matters much with Tether.
Yeah, I think Tether's definitely in a case of it, in a case of its own, right? But I just, yeah, it's just so fascinating that the crypto industry, it seems it's very it's very tech driven. I think in that sense, where the one thing programmers love is just making things more complicated and more higher level and more abstracted and more, driven, of course, by businesses and product managers who will do the same thing. They will say, oh, but can we just add this, or can we just do this? Or, they're dreaming of this grand future, this amazing product that can do everything under the sun, right? They're usually not hoping for, look, can we just have a simple product that is reliable and works? And that's kind of the same mentality as taking over a lot of cryptocurrencies, less in Bitcoin Cash, I think. And I'm actually sort of glad that it's still just cheap, fast, reliable payments. Like the killer app is just moving money in my mind. And in the short run, adding all these tokens, doing a lot of different things, okay, that might be good to have those options. And we're going to talk about smartBCH again there too. But fundamentally, the more of that stuff you add, it's like you're creating a short term or more functionality, but the trade-off is at some point you got to pay the cost for that, and that's definitely where Ethereum is at now with the insane fees that we saw. But despite those fees, they're crushing it in terms of stealing away BTC's market share on Coinbase, at least, right? So what's the next thing we've got here? Yeah, right. And this is not a unique trend either. It's not just Coinbase where this is happening. So Grayscale, who are the biggest crypto Wall Street investor, I don't know what you call them, fund. They obviously the same. They publish data on what's going on with them sort of at semi-regular intervals, and they have been buying up huge amounts of Ethereum and Bitcoin Cash, particularly. So they have bought up when I took this screenshot a couple of days ago, their BCH, they bought up 15,000 extra BCH in this screenshot, but then later on they were buying more. So I think they ended up buying, according to the numbers that someone calculated on Reddit, 120,000 extra Bitcoin Cash, which was then about 35% of their trust. So they had increased it by a full, more than a third. Just absolutely massive, like millions and millions of dollars we're talking about here. More, hundreds, tens of millions at least. And but they weren't doing the same in Bitcoin, which is really the noticeable thing, that they'd sold 250 BTC in the last 7 days, and let's see, is this? Yeah, and just over 1,000 in the last 30 days. So they're actually just trimming off their BTC a little bit and just starting to, buy up chunks of BCH, which is obviously a good indicator for BCH, and maybe is contributing to the BCH rising against the BTC pair a little bit. So I mean, the big money, they only operate on a long time frame, really. So yeah, I don't know. What did you think about this? Do you know much about Grayscale? What's the story with the institutional investors?
I have no idea. All of the information I've gotten from Grayscale has been from other people's YouTube channels. Um, but I think it makes sense. Like if you're looking at BTC and like what they're putting out, like what are they innovating on? They're still working on Lightning Network, right? They're still trying to get adoption on that son of a bitch. And like if you look at Ethereum or Bitcoin Cash, like both of those things, even if they're kind of hype driven at the moment, like I think BCH having the EVM sidechain is good and bad, because it's good that we can have like introduce some of those Ethereum users, but if the Ethereum users are what you're talking about, like the new BTCers where it's just about making money, then like, yeah, I don't know. But it makes sense for an investment firm specifically to be like, well, they're actually doing something to bring users in, we might as well.
Yeah, it's funny because this Grayscale trust, they have literally like billions and billions of dollars of crypto under management, and I guess a large part, well, I don't know all the details, maybe nobody does, as to who, how that pie is all divided up, right? Like some percentage of it is held on behalf of different corporations and trusts, and some retail investors that somehow got in there with their like retirement funds buying up a slice of it, and like who knows how the hell it's all managed. But essentially the retail investors are in a very weird spot because they have a massive amount of money and can move the market, but because of that, they're paradoxically the least, I think, interested in projects that are just becoming, oh, buy and hold and we're going to the moon. Because if you're an individual, it's very easy to get excited about that story, put in your money, watch the price go up a little bit, and then you feel like you're a genius. But if you're running this fund with billions and billions of dollars of crypto, you're not worried about paying your mortgage next week or anything like that. You're thinking in 20 years time, is this asset still going to be around? And if it's not, I'm going to be in big trouble if I put a couple billion into something that just ran itself off a cliff, right? So I think these investors, whoever is making these decisions, Barry Silbert or whoever is involved at the top of Grayscale, looking at what to buy up chunks of, I think they won't just buy a lot of crappy ass coins that they haven't looked into, because they need to be convinced that there's a certain amount of staying power. But on the other hand, I think they also do pay very close attention to, is this coin actually going somewhere? Because just a lot of people getting excited and tweeting about it on Twitter is not going to get them to buy in. You're not going to put in $1 billion just because somebody told you that ETH was ultrasound money. If you're like, wait, I tried using Ethereum and it sucked, So that's where BCH certainly can have an edge, and maybe we're seeing some of that here. I don't know. All right, so then I'm just piling it on here, but this is more in bad news for BTC. This is the theme of this episode, which is that BitPay, I've been carefully watching their stats page to see when they would release the updates of their how many payments they process, because similar to Coinbase, they've been around for a very long time. They're very well known, and crucially, they're going to show real world usage, right? People using BitPay, they are paying for things. They are using cryptocurrency as a currency. So this week, or not this week, but this month, they finally released, I didn't realize they did it like this, but it seems like they wait until the end of a quarter and then they release 3 months of data at the same time. And they even actually hide the previous data. So I kind of feel like maybe I should send them a support ticket or something. Like, can you just publish all the data? But luckily I had saved the previous set of data. So we've got 4 quarters to compare here. And we had in June of 2022, Bitcoin was more than 90% of all of the payments. And the second biggest was Bitcoin Cash, which was 3%, and Ethereum, which was also about 3%. And there's a couple other ones, right? And then by November of last year, Bitcoin had dropped down to about 70, 78, 80%. So the rest of the coins had been expanding and had taken up more of this market share. And so then we got the stats for February 2021, where the other coins had expanded again, up to about 25%. So Bitcoin was down to about 75%, and Bitcoin Cash and Ethereum had swallowed up a lot of Ripple, had sort of somehow vanished, and was all being done in Bitcoin Cash and Ethereum. And now in June of 2021, the most recent numbers we have, yet again, Bitcoin is on the decline, and a huge decline down to about 57% of the market share. So if you add up Bitcoin Cash, Ethereum, and Dogecoin, which each had more than 10%, and then throw in a couple other smaller other ones, it comes up to really 43% of the market. So, I mean, especially at this rate of change where it seems like on a quarterly basis, the sort of the rest of the field is grabbing, anywhere between 10 and 15% away from BTC pretty consistently. It will be the next numbers that we get. In one quarter they will probably be over 50%, and then they might start chipping away so that BTC is just in the minority. BTC just becomes the second most used coin. Bitcoin Cash is obviously leading the way right now with about 15%. It was as high as 17%, but currently at 15% on the latest numbers, and then Ethereum also close at 14% and Doge at 10%, coming out of nowhere with, I guess, all that hype of Elon Musk getting involved and Mark Cuban sort of pumping it and all that. But the story to me really is just that BTC, once again, nobody's talking about this. Like, I have not seen a single Bitcoin supporter really being like, guys, this is code red. The market is actively just slipping through our fingers. All they're worried about is, oh, the price went back up and maybe we're still in a bull market and we've still got 40 or 50% of the crypto market. Like, of course they will, as the trusted sort of brand name. The price is going to be the last indicator that's going to shift away from them once it just becomes so overwhelmingly obvious to everyone else that another coin, whether it is Bitcoin Cash or Ethereum, or even just a combination of the rest of the market, has taken away any utility that Bitcoin sort of used to have.
You cut out there.
Any thoughts on this one?
I mean, I feel like the maximalists are still gonna be like, oh, well, it doesn't matter because it's a store of value anyway. But at the same time, I also think they'd probably be like, well, BitPay also has done the extra KYC for the new Europe regulations, and like real cypherpunks wouldn't use that. So it'll be like a mix of both excuses, but neither of them mean a damn thing.
Yeah, absolutely. They're just trying to look for any. Well, I think they're not even looking at these numbers. Like, they're not even looking at them. That's what amazes me. Like, so there's not. I agree with you. If presented with this kind of case, there'd be a way of excusing it, or saying like, it doesn't matter because we're digital gold. So as long as everyone's still holding and got their lotus meditation pose with their Bitcoin safely in its cold wallet, then the network is getting stronger and more valuable. Because they just kind of have this idea of the Lindy effect, which is true, that the longer something is around, the more proven it is, and the fact that it is stable and it works is, good. And I can see why, relative to Ethereum, as we've been discussing, Ethereum's been having these problems. They can sort of be, they can sort of say, we're not doing that. They can stand in contrast, where Ethereum is making a lot of radical changes and constantly trying to add new bits and bobs and, onto the kitchen sink, and suddenly one fee crisis to another fee crisis sort of lurching around all over the place. I can see why they're happy to say, look, we're just going to be stable and boring. And that's something that you can't copy, no matter how much code you throw into it. Is you can't give people confidence in stability if you're always changing things. That's true. There is some merit to that, but Bitcoin Cash is in the wings, as are probably other coins, which are like, well, we're also pretty stable and we're not doing anything that radical, but we are eating up the real utility, as we can see here from these payments. And consumers, if they try Bitcoin BTC and they sort of get burned and they switch away from it, they're not coming back. And the same with, I think, just more and more is like people that I introduce to cryptocurrency. I don't know whether they ever get any Bitcoin or they're really that interested, because they talk to me about it. I send them some Bitcoin Cash. They think, wow, this is pretty cool. And they understand conceptually, okay, there's Bitcoin and whatever, but they have no need for it because they want to trade with me. They just use Bitcoin Cash, or it's, they can just see what's actually happening in front of them, or with other people they talk to might be excited about Dogecoin or something else. Why are they going to suddenly think, Bitcoin is where it's at? There's no draw into that ecosystem, really. All right, and so we've got here. This is an interesting one. A couple months ago, I'll link back to the previous episode that I did about Satoshi Pyramid. It did come to a bit of a crashing halt, as it was always wont to do, with several, thousands of BCH at stake. 2,748 BCH on level 39 was the final level at which it capped out and people stopped paying in. So more than $1 million was paid out. But with this 200 BCH that was initially promised to be on the to be put into a round 2, so that then it was supposed to keep rolling on with each round funding the next subsequent round. Instead, the developers came out with this very interesting post where they said basically that they weren't going to run round 2, but at the same time they hadn't just run off with all the money. Instead, this 200 BCH that they had profited from this Satoshi Pyramid was going to be, so that's about $120,000, or it was. It's more now because the price has been going up. Is going to be dedicated to building a new BCH app store, they said. So the idea seemed to be that they were going to make some other kind of gambling games, and it sort of was quite unclear what exactly it was going to entail, but this sort of new sudden development pot to spend on making BCH tools and games of some kind. And then later on, the vision was supposedly to expand out to, different services, right? So I mean, not noise.cash, because we already have that, but things of that nature that are kind of monetized or cryptocurrency variants of tools and services that people are already familiar with, right? So it just remains to be seen what is actually going to come out of this, but I definitely wanted to comment on the fact that it was a very interesting, that this was so successful in terms of the amount of money that it raised, and then B, also that instead of just running another one, sort of why change what's working, the plan was, okay, we're going to take all this money, instead of just having some of it and using it to fund developers or do different things in the ecosystem instead. And it wasn't a scam. It wasn't also an exit scam, it appears, at least not from the updates we've had so far. So now it's going to be, funding some BCH apps. What did you think of this whole scenario? I never got your initial comment on Satoshi Pyramid either, I don't think.
Yeah, I think I maybe went on the site once, and I maybe would have placed a bet, but that would have been maybe release date or something, and I have not paid any attention to it since. I never really understood it. I did see some people warning people to stay away from it quite a while ago now. But I mean, I'm glad people made some money off of it, and I am eager to see what the execution is going to be like. I think that'll make or break my opinion of the people behind it. But I don't know who they are either, so it doesn't even matter.
Yeah, the typical cryptocurrency anonymous delivery or not. Cryptocurrency, of course, being very unique in the regards that on one hand, it does have a lot of scams and a lot of, things that really never go anywhere. But at the same time, it also has such a huge amount of charity and like volunteer efforts and, very good natured stuff that people do deliver, and they do publish transparency reports, and they do suddenly come out with these like projects and things that they've been working on, whether they were like funded or not, right? So the fact that there was even updates being published at all, to me, meant that it was a pretty good sign. But we're just going to have to wait and see. I mean, I'm sort of excited, to see where it goes, because I mean, I thought that the original Satoshi Pyramid was quite a cool idea. Everyone can watch the previous episode to get my thoughts on that. I mean, obviously everybody playing it had to be very aware of what they were involved in, but yeah, given that it was upfront about that, and they did seem to reliably pay out as they were obliged to, I thought it was an interesting idea of harnessing people's gambling instincts to sort of promote cryptocurrency usage, or to do something that would not be feasible in a sort of fiat banking system. So from those respects, it's been quite good. But now I'm very interested, because I mean, that's a non-trivial amount of money, like 200 BCH, in 1 month. Like, there wouldn't be very few projects in the space that would be able to generate themselves that kind of money, let alone, even like a very big flip starter. You'd have to be promising a lot and have a good track record to get anywhere near that amount of money. So it'll be, fascinating to see what projects, and if Satoshi Pyramid already sort of proves that whoever's involved at least has some ideas for kind of viral projects, or, different competency, ability to code up different things. And I don't know. So we'll have to check back in on this later, but certainly a bit of a wild card in the BCH scene. You don't see as much of this in the BTC scene. So I think that's one sneaky advantage that BCH has, is it's still got a bit of questionable anarchy bubbling along beneath the surface. All right, and then next up, we've got this government bill on crypto. So in the United States, there was this so-called infrastructure bill that was being debated in the government, and they were looking at passing this bill. And then this guy, I guess he must be one of the senators or the House of Representatives, Mark Werner, proposed an amendment at the last minute that would make crypto wallets, stakers, and software developers brokers for tax purposes, meaning they would need to report their transactions to the IRS, the tax office in the United States. And so this just created like this huge sudden uproar in the cryptocurrency community for two reasons. One is that, I mean, the cryptocurrency industry never, is really loving it if the government's getting too involved. But on one hand, parts of the ecosystem do feel that they need to be regulated, like Coinbase and whatever. It's very important for them to have regulatory clarity. But particularly in this case, because the bill was potentially somehow sort of discriminating against proof of stake against proof of work, because it was not going to make miners of proof of work coins a subject to all this overhead and regulation, but it was somehow going to make stakers of proof of stake coins. So how that was decided, or who was sort of, what was the motivation for that, remains very, very unclear. But essentially, Brian Armstrong made a post on Twitter alerting everyone about this bill, and basically said, why is the government sort of suddenly playing favorites and trying to sort of put a regulatory burden onto one side of the industry or another? He made an analogy to say, look, like, imagine if the government just said, okay, we're going to ban Android but not iOS, or we're going to, something like that. In such a young industry, it's a bit premature for the government to be playing favorites. I mean, in my point of view, they should never be doing that at all. But, from another point of view, you could say, well, if they're going to regulate it, maybe they should try and encourage one thing more than another. But it just seems so poorly thought out, and so the wrong way of going about it. So the crypto industry came out with this huge clamor, and these senators Wyden, Lummis, and Toomey put in a amendment that was going to help the crypto community. So everybody was writing into their senators and doing all that sort of stuff. And then it ultimately failed because somewhere in the mix, I don't know exactly how it panned out, but somebody wanted to get some spending on defense approved as part of this amendment, and then they couldn't get that, so they just blew up the whole amendment. So at the end of the day, the crypto industry did not actually get the amendment it needed, and the bill went through with this sort of horrible regulation in it. And so now we're just sort of in a weird spot, I guess, where it remains to be seen how heavily this is going to be enforced or interpreted or whatever. But I think everybody's a bit shaken up, both on the crypto side, because everybody's kind of like, well, what the hell? Now we've suddenly got all this regulation in the US, where obviously, the industry will just move outside the US if the regulation is too strict on it. So the crypto industry inside the US is obviously quite concerned because the government's not going to be helpful to them. Then they really have the choices of get out competed or to move. But I think it also shook up the US government, it seems to have been a bit, because they sort of tacked this crypto changes into a bigger piece of legislation, and then suddenly got hit with the force of 1,000 swords or something, as the crypto industry just all appeared out of nowhere, making a huge racket, and they probably didn't really realize exactly how big cryptocurrency has become, or how passionate the community is, or how many actually entrenched interests and different things there was going on. This is not just now it is a $1 trillion industry plus, so there's a lot of people involved, and the US being a big country, there's a lot of ways that's tied into everything. So I think they were also a bit shaken up. In the end, it didn't turn out in crypto's favor, but I'm sure they won't be making any hasty moves next time in terms of just putting in any crypto stuff without expecting to get public reaction. Do you follow this drama? What did you think about this?
I saw a couple threads on Twitter when it hit. Not being American, I decided to not pay too much attention to it. I'm so interested in how they're defining wallets, because there's so many different types of wallets too, whether they be SPV or custodial or non-custodial, and then I don't know, even US developers, just encouraging people towards black or gray market solutions isn't necessarily a bad thing overall, but I think they're shooting themselves in the foot by doing this, especially being an international industry. What was the end goal here?
Yeah, my takeaway from this, I think it was very interesting that a lot of critics of sort of the crypto industry, they kind of do their little victory lap where they come out of the woodwork as crypto is getting regulated and say, haha, you guys all try and put off that you're so anti-government and you're so resistant and you're fighting the system and stuff like that, and you'll be fine even if the government tries to take you down. But then, one line goes into a piece of legislation somewhere and suddenly you're all in a huge panic. And I think what the sort of critics are missing is that the crypto, there's a big spread in the crypto industry. There are more sort of underhanded, anarchist elements to it, and there are the more elements that are trying to sort of play by the rules and toe the line. For instance, Coinbase, they're a big regulated public company. They can't really afford to be trying to sort of wiggle around any legislation or anything like that. But it's a big pond, right? And there's a bit of everything. And so people like Brian Armstrong, who's just trying to represent crypto, in the government sort of sphere of influence, and encourage leaving the door open for that innovation and consumer choice and whatever. If the critics are suddenly saying, haha, Brian Armstrong, see, it was all a fraud, you're actually not that resistant to government. I think what they don't realize, but that he definitely realizes, is that if the government starts shutting off the legitimate sort of pathways, then basically the response will be to swing the pendulum the other way, that people will just relocate into other countries, or they'll find other ways around being compliant, or they'll develop some new technologies or some way to sort of stay ahead of the game, right, and turn it into a bit of a whack-a-mole from the regulators, who ultimately are quite slow, not only because it takes them time to figure out these amendments and do whatever and then pass them, but then to enforce it, and then by the time they've done that, the industry's moved on, so they're constantly like behind the game here. And I think, yeah, it's a bit myopic for many of the critics who felt like, oh, look at the crypto industry, they think they're so against the government, but then they're panicked by the government. It's really like, well, a certain section of it is. I mean, for me, I feel, yeah, like really the solution to a lot of this stuff is, if the US just wants to shoot itself in the foot, then that's to other countries' advantage. Somewhere should be thinking, well, let's introduce some friendly crypto regulation, and we'll get more companies into our country and under our regulations, and that ultimately crypto has to be a grassroots thing. So spreading it peer to peer among the people all over the world, not just in the US, but everywhere, probably especially not in the US, under this kind of regime, does help to then make sure that other areas will be able to pick up the slack in terms of being able to provide an environment for cryptocurrency.
Also interesting to see like how El Salvador has taken the opposite approach, it seems, and they're like politically a shit on country, and for good reason, but just interesting.
Yeah, exactly. It's all freedom in the land of the US until suddenly it's actually not that much freedom, and it's all. I mean, it's the El Salvador case is definitely a strange one, because in that case it's supposedly quite like an authoritarian type of setup, and even the way they did crypto was like, you have to use it. Like, it's not, we're going to just, like, the best thing for cryptocurrency is to be given regulatory clarity that it's not going to be banned, but there's not going to be a lot of other rules, or there's not going to be a lot of mandates or anything, right? So El Salvador is just a weird case, because it was like, well, we're going to make cryptocurrency legal, but then we're also going to force you to use it. And we're going to have to wait and see if more information kind of comes out on the ground. But it seems like so far the polls that I've seen, that information that has been coming out has been people in El Salvador actually quite against it. Like, some of them like it, but some of them are also like, look, I don't want to accept Bitcoin payments, so I don't know why you're forcing me to do this. This doesn't make any sense, and it's hard for something to catch on if the actual hearts and minds of the people on the ground are sort of against it. So then it's very the opposite of crypto. So yeah, once again, I think Bitcoin Cash really needs to just take advantage of this by grassroots adoption, basically spreading to places where people need it and getting them to use it voluntarily. Ultimately, that's a system that is far more resilient than any kind of mandated compliance to use a cryptocurrency, or alternatively it's also resilient against the government putting in all these controls and rules and regulation, because the people will dispute that, and that filters around throughout society if they're being banned or regulated on things that don't make any sense, and they know because of their own personal experience. All right, cool. So last major news item this week was smartBCH providing an update on the bridge. So smartBCH, the Ethereum virtual machine sidechain, to Bitcoin Cash put out a update where they said they are going to be building a decentralized bridge, which would basically allow you to swap your regular Bitcoin Cash onto their smart chain to use all their apps and stuff, and then be able to swap it back once you're finished. So this is called SHA-Gate, obviously like SHA-256, the mining algorithm. And they said this SHA-Gate would be decentralized, non-custodian, miner supervised, and fully implemented with Bitcoin Cash's script bytecode. It does not require any consensus change of Bitcoin Cash, nor rely on operators' honesty for asset security. So I guess that's really kind of good news. That's basically exactly what you'd want, which is that supposedly, or according to this update at least, they can make it work without needing to get a network upgrade to support it, because if there was any need for that, then suddenly the battle lines would start being drawn and people would have to debate the merits of that and technical solutions and whatever. But if the existing system is fine for them to do what they want, that's great news. And also if it's non-custodial or it's auditable or something, so that people are not being, it doesn't rely on any trust. That's the whole point of cryptocurrencies, that it's like trustless. Then that's obviously exactly what you want to see. So there's no no time frame given for when exactly this might be kind of ready to go, but they've claimed that they're working on it and it's going to be coming out soon. So in the meantime, they announced that they would be doing a centralized bridge with the cooperation of CoinFlex, which is a really awesome Bitcoin Cash friendly exchange. And so essentially they're going to make this SHA-Gate thing, but in the meantime, you will be able to sort of deposit your BCH onto CoinFlex, who will then lock it up with their own multi-sig wallets and different things, and cooperate with smartBCH to allow the unlocking of these BCH onto the different chains. So yeah, I don't know if you saw this, Jett. What did you think about this one?
I saw it. I'm eager for it, but I don't really know anything about it, and I'm waiting for that first thing to get released so I can screw around with it. I don't know if I really want to. I haven't used CoinFlex. I don't know if I want to make another exchange account to tinker, so I'll wait a little bit.
Yeah, we might be waiting on the decentralized exchange. And I think one thing that I found kind of odd about this announcement was I'm actually quite happy to see it. It seems like a pretty sensible plan of attack to me, that the we're trying to get to a decentralized bridge, which is quite a difficult thing to do, both sort of technically and conceptually. So that's going to take a little while. And in the meantime, we're going to do a sort of centralized bridge so that we can at least get the ball rolling. And for people who want to be involved or use that system, they can start things in that way. But I've sort of seen like the community was kind of a bit down on this, on all aspects of this, because it seems like it's kind of impossible to please everyone. Because I saw comments, some people made comments that were kind of like, but why are we doing a centralized bridge? Like, can't we just have the decentralized one straight away? And if we put in a centralized one, won't things start working that way? And then, like that will create sort of inertia, and then we will never get to a decentralized bridge. So people didn't really have a lot of faith that that decentralized bridge was necessarily going to arrive. And then some people were sort of like, well, why did they even release smartBCH at all? Why didn't they just wait until they had, they had the decentralized bridge and they had the whole mainnet operating and they had everything ready to go before they released any of this? Because why are they, they sort of annoyed to be hearing announcements that are like, updates in small chunks, rather than like, but if I can't use it, then what's the point? Is what some people kind of think. And then other people were sort of like, why is this taking so long? Like, can't we have all of this already? It should be there. Like, what about, so some people wanted to have no updates and give them time to just get it done and then come back and report. And some people wanted more updates and it all to be released today. So between all these points of view, there's just a broad spectrum of kind of dissatisfaction when, from my point of view, they're doing a great job. Like, we don't necessarily have a time frame, but like we were just talking about with Satoshi Pyramid, getting updates is a good thing. If you're getting updates and transparency, that's great. If we have to start with a centralized bridge, well, sometimes that's how you got to do it. You know, the reality is of software development is that the way to have a disaster is to release things all in one big grand release that everybody then piles into and uncovers these problems. It's actually very sensible to segment things up into smaller chunks and just release them, you know, piece by piece, and make sure each is tested and working before you move on to the next one. It seems completely logical to me. So I don't really know why the community was so upset about this.
I just hope we don't get to a point where it's like we're in integration hell. But aside from that, I mean, like, didn't they do a flip starter as well?
Yeah, I think they got 1,000 BCH maybe.
Yeah, so if I were an investor, I might have something to say, but not my money. They seem to be doing all right.
That's always the best. Flip starters that you are not funding. So then it's all upside basically. If it doesn't deliver, well, that's fine. But if it does, well, good that the community kind of funded it, right? So yeah, again, it sort of remains to be seen. Like, nobody's saying that this is, you know, the nirvana that we've reached with smartBCH, but it is rolling out. We are getting updates, and software seems like it's on the way. You know, there's been source code published, there's been a lot of stuff. So I think, you know, it's not vaporware at the very least, it seems, and the team seems to be working hard on it. So I'm very happy to let them crack on with it. And yeah, anybody who's dissatisfied in the community, I think just like relax, just let it play itself out a little bit more. You know, it'll be ready when it's ready, and it's good that we've got it happening kind of at all, I'd say, right? So yeah, that brings us to our last little segment of the podcast this week. We got meme of the week, so this is just filling in the theme of the week, and also just because I particularly like these kind of memes. So it's the Anakin and Padme one, comes from Michael 10 on Reddit. So Anakin starts off with, "I'm going to enable Bitcoin Core to be scalable for all of humanity, I guess, with the Lightning Network." And then Padme's, it's Padme, right? Not Queen Amidala? I don't know. Maybe my knowledge of Star Wars. Anyway, whatever, princess, whoever it is, in 18 months, right? And then Anakin gives her the look, and she's like, "Oh, in 18 months, right?" And that's pretty much what it is, right? Like, Lightning Network had its memes about it was going to be ready in 18 months. That started in 2015. It's 2021, 6 years later. It's still kind of a bit broken and not really working that well. Gabriel from firstmill.com, he did actually a really good demo of that. You can check out a video he recently did where he showed all these Lightning wallets and said, "Look, just send me 1 cent." And then he showed a Bitcoin Cash wallet, and just obviously, I mean, his audience was all Bitcoin Cash people, so of course they were the ones donating, right? But the Lightning Network community could have banded together and put out the word and all sent him in 1 cent each to prove that it was so viable, but they didn't really do that. So he was having problems with the invoices and different wallets, and it's just like still a mess, right? Bitcoin Cash is simple and it works. And yeah, BTC, they're running out of time, you know, if they're going to keep messing about with this stuff. Coinbase volume is moving away from them. Grayscale is moving away from them. BitPay payments is moving away from them. Other projects are innovating. You know, Ethereum's got ETH 2.0. They've been doing their London hard fork, all that stuff. BCH has got smartBCH. Just bad news for BTC, I think. That seems like it's a bit of a sinking ship from my point of view, you know. All right, and last thing for the week is the message to the community. So I guess usually we let the guest fill this one in, but you kind of had some thoughts last week, Jess. So I'm thinking for this week, it's going to be my message to the community. What do I want to say to the community? I think things are looking up. I think we're going to see a massive, I mean, I keep saying like 6, 12, 24 months, and I think there's going to be a huge growth in the scene in that time. You know, there hasn't been a lot of momentum or, you know, problems starting up about forks and about different things. And I think the Bitcoin Cash community, from what I've observed, is starting to find it's like water dripping onto a mountain. And that's, you know, it's sort of this unseen force where it just finds its way into all the little cracks, and that's how it, you know, suddenly grows in strength without anybody really noticing what's going on. And in, you know, just all around the world, it seems like Bitcoin Cash is sort of making inroads in Nigeria and in South America and Venezuela and in Colombia and in Australia. It's just always kind of ticking along. And then in Japan, there's a big community there, and like smartBCH is looking to get rolling. Noise.cash is doing great at the moment. Like the BCH volume has been pretty good, and if the price spikes up, all that means is either we spike against BTC, in which case we're suddenly having more resources as a community relative to them, or even if both coins spike, that just, you know, means more resources for the crypto community as a whole relative to, you know, fiat and governments and all that stuff. So I think all of those things are just looking really strong for the community, and I think the unseen hand of the market is going to really start to work its magic, given that the community is in sort of a peaceful, cooperative state. And I'm really looking forward to the next little while, and I'm sure we'll see some good results out of that. Any thoughts, mate?
It sounds like a big change from calling the cryptocalypse, like, or cryptocalypse or something a couple episodes ago.
Yeah, true. I still feel like Tether, you know, could definitely melt down. I mean, it's really a question of like, how long can the scam go on for, really, right? In fact, they printed up a little bit more this week. They printed out another billion or so. So that undoubtedly was contributing to the rise as well. I mean, really, you know, so it's just kind of a case of like, can things kick off without the industry melting down, you know, without Tether melting down, or like even just this this regulation, you know, happening in terms of the like US infrastructure bill and like all that sort of stuff. Like that's the kind of thing, is the government there is busy creating all these regulations or whatever. Then if Tether blows up, they're going to have a whole new mess on their hands that they're completely unprepared for or distracted with or whatever. Like it's just going to be one thing after another. Like every one of these disasters is a disaster for the crypto community, but it's also a disaster for whoever's trying to keep a track of what's going on, really. So yeah, I mean, I still think Tether's going to blow up, and it's really just comes down to, do we get another run and then Tether blows up after that, or does Tether blow up first and kind of preempts the run and puts the whole industry back in the dumps? But it's also hard to know. Like it could blow up, and maybe it. I don't really believe that it wouldn't be that much of a big deal. It would be a pretty fucking massive deal if it did blow up. But you know, the BCH community, you know, doing charity in South Sudan, you know, spreading adoption around the world, like Noise.cash in the Philippines, all those things, that's all independent of Tether. Whereas coins that are just excited about the price going up, like Bitcoin or like Ethereum, well, their party just ends if all this money just vanishes out of the scene and suddenly the price dips, right? So yeah, I suppose I kind of want to clarify that. I'm optimistic about BCH because I see real growth in the technology and in the community, and the price can be a cherry on top provided Tether doesn't blow it all up, but it's not reliant on that. So I think that's that's where things are. But so far, my predictions are aging terribly. I mean, very short time frame, but they're definitely, I'm I'm completely open about that. So, yeah, maybe I'll be right in the end. But so far, the bulls and who are just saying, it's all tether FUD. Well, they're definitely coming up good so far. So. Yeah, another week in cryptocurrency. Never boring. Right, so that's pretty much the end of the show there. Slides and resources, as always, are at bitcoincashpodcast.com. Like I said, I started writing up some FAQs. I figured my strategy is going to be to see what questions people ask on Reddit when some new user comes in and says, but what about this? Then usually I write them a response. So now I'm going to start using those as inspiration to build up a bit of an archive on the site that has the top, 100 questions that everyone always asks when they get into cryptocurrency. So that might be useful for people who, their friends or family are getting interested. Maybe they want to have a look at that. Donations, as always, people can donate to the show, and thank you very much to everybody who has donated in the last week or at any point. It's been absolutely amazing. And for this week, my shout out on top of that as well is going to go to prompt.cash, because I've been really enjoying using their service. I might try and get some of the team from that on the show at some point, because that's been really cool, and being able to sell the show, early access for just $1 or so in Bitcoin Cash trustlessly, it all just works really nicely, and that's the future. It's so cool to have income, in Bitcoin Cash and expenses in Bitcoin Cash, and there's just no fiat. It's just, I'm already living in the future. It's amazing. So yeah, that's it. Any final words, Jett?
If my orders on Purse are still active, you should go hunt them down and purchase them for me. That would be fantastic. You'll get some Bitcoin Cash for it.
Everyone get involved on Purse.io. I actually need to get some stuff on Purse as well myself this week. So yeah, anybody with spare Amazon gift cards, or I don't know, I guess you can just take fiat and buy Amazon gift cards and then end up with like BCH in a kind of roundabout way that way too, actually. So anybody who's interested and wants to buy stuff on Amazon, pay with Bitcoin Cash, use Purse.io. And anybody who's got Amazon gift cards and you think, hell no, I want some crypto, then check that out too. All right, that will do it for the episode. So thanks for listening, and until next time. Future dollars can buy nothing for